Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the daily time frame with the first bullish scenario where we are looking for a three-wave corrective structure, a zigzag 535, after which we aim for continuation to the upside. Wave C, most common target area, is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the end of wave B, giving you a target between 54.6k and 50.5k, which as you can see is touched. The 1.618 at 43.9k is an extension target for C and is a little less common. Now, if the low over here is in, wave C is finished, and we look for continuation towards the upside, then we want to be able to count a solid impulse, a 5-wave move to the downside that ends at the low. So the question is, can this be an impulsive low? Now let's have a look, starting with the red count. In red, this is your high of your B, and you look for 1, 2, 3, 4, 5 to the downside to finish the yellow C. The problem with the red count here is that your wave 3 is the shortest wave. Wave 1 is longer than wave 3 and wave 5 is also longer than wave 3, which is not allowed in an impulsive structure following the Elliott wave principle rules. The 0.618 was also touched for wave 4, which pretty much invalidates a wave 4 as well. So that is not great. Now you could move your wave 1 and your wave 2 to the left, but then we still have the problem that your wave 3 here should be an impulsive structure. 1, 2, 3, 4, 5. Well, we can't have overlap between wave 1 and 4 inside a wave 3. And besides, also here, your wave 3 is still shorter. 1, 2, 3, 4, 5. Your wave 3 is the shortest wave between 1, 3, and 5, which is still not allowed, right? So the red count is not really a great option. Then we have the green count. This is the end of your bigger wave B, and you count a wave 1, 2, 3, 4, 5 to end the impulse at the low. Look for continuation to the upside. Now on most of the charts, this wave 2 took the high of your wave 1. There's only a few charts, which actually includes this one, where wave 2 did not take the high of 1. But of course, probability wise, if most of the charts took this high, the probabilities aren't great for this high over here to be the high of a wave 2, because the moment wave 2 takes the high of your wave 1, the origin of 1, it invalidates an impulse. So because on most charts, this high here took the high on the left, the probabilities aren't great for this impulse to the downside. And beside, if we then look at the green wave 3 to the downside, then this structure to the downside has to be a 5-wave impulsive move. 1, 2, 3, 4, 5. It can't be a diagonal or any of that stuff. But because of all the overlap that we have over here, we can't actually nicely count this move to the downside as a solid 5-wave finished impulsive structure for a wave 3 to then have a 4 and a 5. So that is also a problem, which therefore decreases the probabilities, together with this wave 2 taking the high of 1, of the green count to be a finished impulsive structure as well. So at the moment, from a probabilities perspective, the probabilities aren't that great for a zigzag wave C to be finished at this low. Now an alternative, therefore, is what you see on the chart here. Now it is very early to start talking about diagonals. Generally, I like to start talking about diagonals when we are working on wave 4s. However, because of the analysis shown on the 4-hour time frame, this is a scenario that can work. What you're looking for here is the yellow box. Once again, that is the target area for your bigger wave C. But now inside the bigger yellow wave C, we have the green count, which is an ending diagonal in a wave C. So we have an A, B, and then wave C turns out to be a diagonal, where this structure to the downside is now not counted as a impulse to the downside, but it is counted as a zigzag, so a 3-wave structure ABC, which can work better compared to an impulse. Then we have a zigzag in 2, look for a zigzag in a wave 3, then a 4, and then a 5, meaning that what we are working on now is then a wave B in a wave A, B, C inside wave 3. Now wave 3 preferably is going to be shorter than your wave 1 in price. You can see the yellow 1-to-1 that I have on the chart here, taken from the start to the end of 1 to the end of 2, giving you a pretty much maximum target of 50.2k for this wave 3. It is not a hard invalidation for price to hit the 1-to-1, but preferably in a diagonal, wave 3 is shorter than your wave 1. So preferably with wave 3, we don't go this low. Now then we want to see a zigzag family structure in 4 and finally a move down in 5 to then start a new impulse to the upside, 1, 2, 3, and on we go. Now, if I open my folders with some support and resistance areas, then you will see that my drawing here has been made based on some levels on the chart. First of all, we have a daily naked point of control at 60.9k, which is an area of interest, interesting resistance on the chart. And on the daily time frame, we also have this important support resistance area, which at the moment is acting as resistance as well. So this support resistance area, together with the daily naked point of control, very interesting indeed. If we even go higher, you do have a weekly naked point of control here at 62.8, but that becomes quite high. Now after this wave B and then A, B, C, we're looking for a wave 3 to the downside. To the downside, we have incredible support here between 51.9k and 51.7k, right? Important area on the chart, nice target for wave 3 to then move up for your wave 4. Now, once this range is then finished, we will have some volume levels of this range to test wave 4 and find resistance, then move down for wave 5 to move towards the daily level and the 1.236 trend-based fib extension, which is the target for wave C, still hanging around the common target area between the 1 and the 1.236, and then look for signs of strength and continuation to the upside. Now, from a sentiment perspective, this scenario is incredibly interesting. I love to think about psychology, and one of the things that I spoke about many times was this zigzag structure A, B, C because of the psychology. If we can move up very high for this wave B towards the 786, 886 area, then over here at the high, people are going to be thinking about a breakout, continuation of the trend, bullish continuation, 100k next, la-di-la-di-la, everyone bullish. But then instead, it is awesome to move to the downside and hit all the stop losses and take all the liquidity, right? So from a psychology point of view, this was the most interesting scenario. And this is where we are now. That video was made over here. We moved up to the 886, everyone bullish, and now we are down here taking the lows. Beautiful. Now from a sentiment perspective, I think this diagonal is awesome. Now we have to, of course, give price a little bit of time as well locally for us to really confirm the diagonal, but it really fits with fucking around with the sentiment. So here we have price now. If we can move up a little bit further, we're gonna hear this. The low is in, right? And if we then move to the downside once more, okay, maybe not, right? Low is not in, but everyone here is looking for support. That 51k area, great support, right? Previous range as well, weekly order block, all of the good stuff. Must be good. Hoping that the low is in, and we are going to continue towards the upside because wave 4 has to be a zigzag family structure, and a zigzag can mimic an impulse in a 1, 2, and then 3, but instead it's an A, B, C. There is hope, right, as price moves to the upside impulsively. However, price then moves down once again, taking the low of wave 3. Sentiment be like, okay, fuck this, I'm done, I better sit on the sidelines, bear market, whatever. We are clearly in a bigger downtrend, right? We are losing important supports, blah, blah, blah. And then we move towards the upside once more. Sentiment, probably fake again, right? Just another little rally before continuation to the downside. Price moves down. Confirmation, yep, I told you, we're gonna move down. But then you get your wave 3 and then you get, oh shit, FOMO. Fuck, I'm missing out. I need to buy. And then we continue towards the upside. So from a sentiment perspective, this diagonal is really nice and definitely one that I'm going to keep in my folders here in TradingView. So the second scenario, which is also a bullish scenario, is a complex structure, a WXY with inside wave Y, a zigzag structure. So a 5, 3, 5, A, B, and then a wave C. The most common target for your wave Y is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of W to the end of your wave X, right? And the 1.236 is touched. The 1.618 at 48.9k is a rare target for Y. So preferably we don't go down there, and in other words, preferably your low is in this scenario, right? Now, when we were talking about the impulse to the downside, 1, 2, 3, 4, 5, we mentioned that this move to the downside here is not nicely to count as an impulse 1, 2, 3, 4, 5. However, in a zigzag to the downside, A, B, C, we talk about impulse, 5-wave structure, 3-wave B, 5-wave move down in a wave C. Wave A on the lower time frames does not count nicely as an impulse 5-wave structure to the downside, and also the common target for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the end of B. The 0.618 is a rare target for wave C, which is touched at the moment, acting as support. But in combination with wave A not being a nice clear impulse, wave C 0.618, not that great, right? As you can imagine. More about that in the probabilities. We have some news today, so please trade safe on the lower time frames. Thursday, July 11th here, 2:30 p.m. Central European Time. High impact news, so might increase the volatility on the chart. I will make sure to be live on YouTube with the news coming in as well, so we can observe and analyze it together. And if we then finally look at the probabilities of the different scenarios, then currently, from an Elliott wave point of view, the probabilities are higher for price to make another low. And then on number 2, we have the low is in, of course. Now, the reasoning for this is that the probabilities are low to count a finished impulse to the downside over here, as explained in the analysis. Either your wave 3 here is the shortest in a 1, 2, 3, 4, 5 wave structure, which is an invalidation, and wave 4 hit the 618. And in the bigger 1, 2, 3, 4, 5 wave move, on many charts, wave 2 took the high of your wave 1, and your wave 3 cannot really be counted as a very nice impulsive structure, right? In the WXY scenario, wave A is not a great impulsive structure, 5-wave move, and wave C only hit the 0.618. Most interesting resistance to test to the upside is the daily support resistance area, which is this white box over here, sitting between 59.2k and 60.4k, but also the daily and the weekly naked point of control, with the daily naked point of control sitting at 60.9k and the weekly naked point of control at 62.8k. Now let me be clear that both of these scenarios are bullish in the end, as they lead to a continuation of the trend towards the upside, right, on the weekly time frame. This has the highest probability in general on the weekly. If price can flip the daily support resistance area and move above this high over here without making a new low, that would be positive for the bulls. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.